Hello everyone to another global macro update. In this video, we're going to be talking about the Chinese belt or the pathways that they're creating within Europe, within Africa, within Asia, and kind of the possible war that's approaching here. Not to be negative, but when a global dominance is being challenged, it's not going to come peacefully. And the United States has been a global superpower for quite some time, but they are losing their pedestal of being first place, it seems like. And as a number two, if you have an opportunity to potentially become number one, if you have the resources to build massive infrastructure all over Asia, Europe, Africa, you're going to try to use it to kind of hold your own and be number one potentially. So we will discuss that right now. Let's go into the article. We see that right here. China will emerge from the coronavirus crisis stronger than the U.S. experts warn. So I'm kind of tying a few articles together here. This is going to be talking about how China is going to come out looking stronger compared to a lot of other countries, and in particular the United States. I don't think we've seen the worst of it in the US, and if it gets worse, we'll go into, there's going to be blame. People are going to be pointing fingers, the blame game. Whose fault is it? Let's source it. Oh, it's China's fault because, they're doing so much better now. They're just cruising by. Their economy is now back on its feet. People are working. Everything's fine and dandy. And we're over at the U.S. suffering in pain. People are dying. And it's worse than Italy. And it's a possibility, right? So, people's egos are going to get hurt, and America's obviously a very patriotic country. We love America. It's the best place in the world. This terrible virus, Trump already called it the Chinese virus. Yes, he did go back and say I shouldn't have called it, but the relationship is already there. And before we dive into it, let's go into this article. I'm just going to get a little bit of coffee here, and then let's dive right in. All right, good afternoon, truck nubs. All right. The coronavirus pandemic gripping the globe may have its origins in China, but experts say that current trends indicate the crisis will leave it in a much stronger position geopolitically relative to the United States. The Chinese are in much stronger position than they have been coming out of any recent global crisis. Ian Bremmer, president and founder of Eurasia Group, told MarketWatch. Another thing he said is, they own most of the global medical supply chain. They basically contain the virus through technology-powered authoritarian surveillance, and they've leveraged this success by providing aid to Europe and emerging markets in the fight against COVID-19. So they own most of the global medical supply chain. So this is the problem with globalization, depending on other countries to produce goods, even services, and yes, you get cheaper prices, and the services may be better or high quality, or you get them for, more efficient costs, or, there are positives to it, but then the negatives is now with globalization, you're getting supply chains that are going and getting stuck in one part of the world, let's say in China, basically across the globe, and they're affecting basically almost every country because they are the global medical supply chain for medical products, basically. So yeah, globalization does have some negative effects. So let's continue reading. Even as China's economy has taken a large hit from the outbreak, and it will continue to suffer from falling global demand as it spreads throughout Europe and the United States, the country does appear to be opening for business, with the city of Wuhan, where the break began in December, scheduled to lift its lockdown next week. So they're already getting to a point where they feel like it is acceptable to get out of lockdown. Now, mind you, they're not. They don't fuck around. They will continue lockdown for as long as it needs until it is going to get better. For example, Trump, in my opinion, does not really understand the true difficulties and potential threat that this virus has on the social economy of the health of the people. In China, no, they will do whatever it takes, and the fact that they are potentially lifting lockdown does actually indicate that they may actually have curbed this virus, and they're on the up and coming and creating a little bit more economic activity. So now let's go on to the relationship. Meanwhile, the U.S.-China relationship has deteriorated in weeks, and as Chinese American leaders have sought to blame one another for the pandemic. On Tuesday, Senator Josh Wiley of Missouri said there should be an international investigation, quote, into the origins of coronavirus, and submitted legislation that calls for China to provide compensation for the economic impact. So obviously they're going to say, yeah, it was created in Wuhan. What a surprise there, right? So they're just trying to play the blame game, and basically what they're saying is they should provide the compensation for the economic impact. So basically they should pay the $2 trillion that the U.S. just printed. They should print the billions of dollars that New Zealand, Canada, Australia, Japan, all the year, like so many countries are printing money. They should just pay for all of that while they are already indebted. Yeah, I don't think that's going to happen. In a tweet right here, which is where we got the quote from. So, rising tensions and what has so far been an American inability to stop the acceleration of new cases are likely to lead to further decoupling of the U.S.-China economic relationship and pushed Europe into the arms of China, said Edward Alden, senior fellow at Council of Foreign Relations. And we'll get into that relationship building further, and kind of the hypothesis that I could be seeing. Obviously, it's not a positive one for the United States, but just bear with me. It's coming, and then we'll get into the TA. So right now it says, we're on the trajectory now to have a worse outbreak than Italy, he warned. This is going to reinforce the impression that the U.S. has nothing to teach the rest of the world. So people who are American are definitely going to get hurt in terms of ego, in my opinion, because a lot of people, yes, like United States is currently the economic superpower in terms of where the world thinks they're in terms of obviously the military and tech and where the mass amount of wealth is stored in the world. But, you know, as a number two, aka China, you're going to have a time where there's weakness. And if you're a number two, do you want to be number one? Well, who doesn't want to be number one, right? Especially if you own basically the global supply chain and you know that you do. You know, we'll talk about it a little bit later here. So let's read here. The implications of what appears to be a pending geopolitical victory will be far-reaching for U.S. economy and businesses, said Eurasia Group Bremer. This will accelerate the deglobalization trend in data and manufacturing. It means that on issues like Huawei and 5G, the Europeans are less likely to follow the United States, and increases the ability of Chinese to follow its standard and join initiatives like One Belt, One Road, a Chinese global development strategy. Again, increase the ability of Chinese to follow its standard and join initiatives like One Belt, One Road, a Chinese global development strategy. We'll get into that right now. Now you're thinking, what is this thing? China has built both a land route and a sea maritime route, and they're in the process of it right now. Let's read what this is. The Belt and Road Initiative is a global development strategy adopted by the Chinese government in 2013, involving infrastructure development and investments in nearly 70 countries and international organizations in Asia, Europe, and Africa. Crazy shit, right? Look at how much they are building. They're capturing all of Russia, Asia, South Asia, and Southeast Asia. They got that entire very key, I forget what it was called, the sub-Mediterranean China. I forget what it was, but this area of sea is very key, and the Chinese just literally took it over. And then they got a key point in Africa, and then they got all of Europe here. And we'll talk about the bases that they have very shortly, but let's continue reading here. Formerly known as One Belt, One Road, the Silk Road Economic Belt and the 21st Century Maritime Silk Road, it has been referred to as the Belt and Road Initiative. In 2016, when the Chinese government considered the emphasis on the word one was prone to misinterpretation. Yeah, I would strongly agree with that. It kind of makes it seem like I think you get what I mean. However, One Belt, One Road is still used in Chinese language media. Okay, so this project has a targeted completion date of 2049, which coincides with the 100th anniversary of the People's Republic of China. So that is what this is. So with ties to Europe depending on China, and then also this is some major speculation, but in terms of what's happening with oil prices, OPEC and Russia are so-called having a war. But let's say, hypothetically, this is creating a possible situation where the world superpower is getting tested. It's been, the United States have been very strong. They were leading out of the Great Depression in terms of economic power. They had tons of gold, and then as time went on, China just became a absolute beast of a manufacturing country, and they built all this. They were a creditor nation, pre-building massive amounts of infrastructure, and then they were looking at themselves and say, okay, well, everyone else is borrowing. Why don't we start borrowing and just printing lots of money? And then they became from a creditor, from the biggest creditor to the biggest debtor, right? Well, not the biggest debtor, but I don't know if it's the biggest debtor, but they became a massive debtor. They took on a lot of debt to build all this infrastructure. So it begs the question of, OPEC, Saudi Arabia, and Russia say they're having a war to destroy basically just cut each other off, and they can basically go down to $14 for Russia and sub $7 for Saudi Arabia. But, theoretically, if you're just speculating, they could be low-key working together to drop the price of oil, because that's a huge sector in the U.S. to then further, put the knife in the body, or to push the pain a little bit more, in a sense, which is obviously really, really not a great thing. But I'm just speculating. But I don't think all of this is completely random. To be completely honest, there's a lot of stuff happening right now, and I just don't want there to be a World War III. But looking at the facts, looking at the things that they're doing in terms of the infrastructure, like they're taking over all, like look at how many Silk Road economic belt hubs are in Africa, and all of Asia, in Russia, in Europe, in Southeast Asia, South Pacific, right? So they're taking basically all that, and then Australia heavily depends on China as well. But this is the biggest landmass on the globe, obviously, and they're the second largest superpower. They are in a very good position to, I can't say benefit or anything, but they're going to be in a better situation coming out of it, and the U.S. already wants someone to blame, so China don't even need to be the antagonist and start the fight. The U.S. could start the fight and say, hey, you're the one who caused us all this pain. You should suffer and pay us the money, or else, right? Or else, we have a huge military and we'll just, fuck you up. But China, I don't think, will take that anymore. And, that is where I'm going to be worried, because if tensions start to rise in the development of the relationship, or the negative relationship of those two countries, that will be a very, very scary time for the globe. And I don't want that. I don't want that to happen. But I do think with social media, there is more of a voice for the people, which is really, really great. Before, you didn't really have a voice pre the internet, really. Now, with everyone having a cell phone, everyone having data, you now have a voice to speak. And with cryptocurrencies and blockchain and privacy, you don't even need like government censorship is no longer 100% going to affect the people who really want to put their voice out, which in my opinion is a very positive thing that's occurring. So I do hope that people are aware of this, and are everyone's against this happening. But yeah, stay safe, everyone. I do think that look back at the Great Depression. That's when Hitler came to rise, right? Because Germany was in such a bad place. After World War I, they had war reparations or reprimands to pay. Don't exactly know what the word. I think it's reprimands. But a lot of countries said the same thing. World War I. Germany, you came in and destroyed our buildings and killed all our people and really, stirred shit in our country. You should pay for it. And what did Germany do? They printed money and then just paid for all their war reprimands in the currency that they printed, and then it just absolutely demolished the people in living in Germany, right? So, like, and when you are rock bottom, when you are at the most amount of pain, you're going to. It's like fight or flight mode, right? And you're gonna fight. You're gonna say, I want to blame someone. I'm so upset at the world. I want someone to blame for this. It wasn't my fault. I had a good job in the airlines, in hotel, or whatever the case may be, and I got personally affected, and I can't pay my mortgage. I can't pay, and there's a lot of resentment towards something. And if a leader or a figurehead points that anger towards something and says, this is what you should be angry about, that's when real danger could come. So be careful of that. If you're a person who is level-headed and you're in a conversation where someone's advocating war, tell them to smarten up. That's total bullshit. War is never the option. It's just not a good situation to be in. So I will complete that section. It was a little bit, I would say, rambly, but yeah, it's a topic that I think is a little bit out there, but I do think that it should be talked about because it's not out of the question, because with how things are currently going, it's good to talk about it early and instead of being way late and go, holy shit, where are we, and how do you get here? But let's now go on to gold and silver. So we're actually tumbling. Silver actually looks like, in my opinion, a good opportunity because silver is actually coming back down here and broke a key level of support. Let's talk about it right now. So we had a position in silver with a pretty good, well-managed risk of 1% with a 4-ish% reward hitting that zone. It was a little continuation pattern. We did see some higher lows coming in, holding a nice ascending level of support. We saw our first bullish push with a squeeze out of the zone, and then once we saw the price hold that area yet again, we started to look to enter, seeing that second push. Fortunately, did not come through. We really managed risk well. Not a problem. I'll take really small losses any day of the week. So now we're going to close this off. We're going to simplify it and just go like that and say, where are we going now? Well, like always, we want to look at the larger time frames and discuss what we've talked about for the last couple weeks here. This is now going to be our lower high, right? So let's continue with the analysis that we had for weeks now. Like we said, let's get our snip and talk about the daily. So we know on the really large time frames, this is that major resistance, and we were trading within a range for a while, and then we started making higher lows, and then we broke out of this zone right here. Boom! This is our small little pullback, and then we started our uptrend. So that green demand zone at around just under 1400 is going to be a major support level if we do get down to that zone. That's an if. But in my view, I think what we could see is, because of the global uncertainty, we're probably going to form some structure where we're going to get a squeeze. We're going to get some price action pattern, in my opinion, right around here. I don't think we're going to dump as hard as we did for Bitcoin in my personal opinion, but we have a very, very strong level of support at 1450 around there. Maybe we'll get to that zone, but in my personal opinion, we'll start to see these lower highs. And, it might be choppy, it might not be, but we'll start to form these lower highs, and then we'll start to be able to form a descending trend line, right? This happened in 2008. We didn't start to see gold really push up until the later half of the recession in 2008, 2009, the financial crisis there, right? So, in my view, this is how I'm going to view the market. It's going to be a very choppy, deflationary moment at the first half, the beginning of the recession. There's going to be margin calls. There's going to be a discrepancy between the spot price and the actual physical price of purchasing gold or silver. And there's going to be a lot of panic, a lot of emotion, a lot of volatility, and there's going to be mayhem in the markets, right? But over time, the dust will settle and true value will flow into the assets that deserve it, that have in my opinion, a fixed supply that you can't print a billion shares or billion dollars or whatever it is. There's an amount of the fixed amount of supply that is coming into the market. Now you could say there's asteroids that have tons of gold and silver, and yeah, that's a possibility, and you can argue that. But for me, I'm willing to take that risk. So going back to the daily chart. That is my possible view of the structure. We will go into the 2008 daily chart for gold as well. But I think that's what we're going to see is some lower highs here. I'll connect it here, and then it's just a matter of if we're going to hold a 1450 or if we're going to get a series of higher lows. So we're going to get some symmetrical triangle, a pennant, and then we're going to get a pretty big squeeze and a push to the upside, in my opinion. But we're going to get, or it could be even like a descending wedge or descending channel, something we don't exactly know. So it could even form some lower zones and then retest the $1,400 zone that we initially talked about, that major level of support that we are now looking at for our demand zone, our major structural demand zone. So in my view, we're not going to be going up just yet. I was talking about this being a potential lower high from here, and I was seeing which way to go. I did put a position in there because we were seeing some higher lows, and in my personal view, we were seeing kind of like a push up like this, where we're seeing waves where we're getting higher lows. So that was a little bit more of a bullish pattern. And, we kept our risk really, really small. Not a problem. I don't mind having a little bit of exposure, because if it did push up, our next zone would be probably a 4-to-1 risk reward, which I'll take, no problem. But we actually made a lower high, which we did talk about for an opportunity for this zone. So that was a key pivotal move, in my opinion, and that really showed that move. Look at that bearish candle, really show that significant move. We only have 1 hour and 20 minutes left, probably even less, until this daily candle closes, and it's a very bearish daily candle below our major structural support zone. We could get a pullback. I do think that we are now going to continue our trend to the downside, and this could probably be our lower high that we're going to form our trend right here. Kind of similar to what we saw right here, a high, lower high, lower high, lower high, lower high. We connect that zone right here. Here's a very strong level of support. Look at that, 1, 2, 3 strong pushes, except on here, this could be the major zone at like 1400, and then the lower highs could be right here. So similar structure to the descending trend line with the squeeze of the strong level of support. That's what we're looking for. We have an edge trading this pattern, and we can see that on the potential larger time frames. If we just zoom out and do this, kind of like that, it could just be a smaller version of that, right? So that's going to be a squeeze, bump up. Once you start to see the momentum, you start to see the higher lows coming in like that. There's that squeeze. That is what we're going to be looking for a potential move. So we got a lot of time before that happens. Now, that doesn't need to be the case. We could see, another descending zone like this. It could be a descending wedge pattern, which is super bullish. But on the short term, we're going to see some deflation. We're going to see some chop, some less desirable trading opportunities where we're not seeing nice flowing pushes to the upside. We're going to see a little bit more of a difficult situation to trade if we are going to get this kind of falling wedge before the huge move up. So I don't want to put a trend line there just yet. I want to see how this is going to react. Obviously, this is on the daily chart, so we have a lot of time before any of this happens. But it's good to, keep your eyes open, understand what happened last time, and then we'll discuss that right now. And then I'm just going to draw this trend line right here because that was a pretty significant rejection at that recent high. So now, in my opinion, that's a lower high, and we're probably going to start coming back down, testing at least the 1460-ish zone. We'll probably get a pullback, maybe validating the $1,600 zone. So let's talk about market structure right now and where we could be seeing the price go because of the larger view that I see the market. So high, lower high, right now, that was a consolidation. I view this zone right here as a volume distribution. We see, there's markup zones, volume distribution, and volume accumulation. This is going to be a volume distribution zone where sellers are going to be getting out of the market and distributing their assets within the marketplace. And now we're getting our initial move to the downside. This is creating our lower low structure. What are we looking for within the market structure? Oh, right, a lower high to confirm the previous level of support as a new level of resistance. What do we have as a confluence within that same level of resistance? We have our first anchor point. We see a touch there, and then you could classify that as just one rejection of the trend line. So it's not really a confirmed zone, but now it's creating a confluent zone where we have a horizontal zone and a descending zone coming together at a single point on a chart, and that is where you have a zone of confluence for a potential level. So if it does come a little bit and consolidate, that would be a really good opportunity in my opinion. Even a potential ascending zone here where it's a squeeze, but this squeeze could then come and spill lower, and that could be another opportunity. So I am looking at the market more bearish in my view, but I will want to see this previous support get tested and validated as a new level of resistance. I would really like to see that to confirm my bias for the new market structure for the markdown phase to the downside. And then a potential first key level of take profit would be 1450, although we don't have any entries on shorts right now. So that's my analysis for gold. We're going to look at silver. Silver's been way more of a short in my personal opinion, but I haven't taken it because of my long on gold and my bias that it could be still trending up. But this did for me validate that we could be seeing a move down on silver very shortly because in markets, in asset classes that you're trading different assets in the same asset class. For example, if you're trading Bitcoin and Ethereum or gold and silver, you're going to sometimes have sympathy plays, which let's say in this case, you see gold move to the downside first. Well, silver is usually pretty correlated with gold, not tick for tick, but general flow of the market, and silver has not dumped down yet. It's dumped initially, but it's consolidated for a while, using the previous support as a new level of resistance. So we'll talk about it right now, but understand that gold just broke the consolidation downwards, and silver has yet to do that. So let's look at silver right now and just take all the stuff off. Right, we see initially, let's talk about market structure on the 1 hour, because for silver, in my opinion, it looks pretty awesome for a potential short, and understanding that the $15 to $14.50 range is a very significant level of sell pressure. And we'll talk about that at the end of this video, but we'll just talk about the analysis for silver. But we'll first look at the smaller term time frame initially. So what do we get? We see a horizontal resistance holding the highs from making a higher high, and then we see a low, higher low, higher low, higher low, higher low, but it's making less higher lows, so the buyers are weakening because it was a huge move up, and then they're trying to push, and they're not able to push it because this zone is so strong for the sellers, and we'll talk about it after this video. And then we get an initial momentum move to the downside where now there's going to be buyers that are initially going to get shaken out. They're like, whoa, that was a big move, right? So and then soon after we tried to get a pullback to push us back up to the highs because the buyers are confident from all the way here in the 12s, right? And now it's at almost 14, so it's a pretty good move. Gonna get a little bit of coffee and then we'll continue here. All right, so then made a move down. So that means every single person who bought within this range since the 24th, let's say, of March, is now in the red. Every single week, we can 100% say that, unless you bought like right there. But like if you're in this consolidation, you're now in the red. And now you're seeing the consolidation continue sideways. You're seeing another consolidation. But what are you seeing? You're seeing the previous support right here act as a new level of resistance, which is, yeah, pretty bearish, right? And then looking at the volume, we see more sell pressure, less buy pressure all around coming into the market. We see a key rejection right at this zone where you're seeing an attempt to push the price up, but then you're seeing an instant rejection right back down. And we can zoom in if we want, but I hope you can see that maybe if we take that off right there. You see the buyer started to push up and then it got instantly dropped. Boom, right? Instantly by the seller. So that is, and we see not just once, twice, 3 times, 4 times. So in my opinion, that's enough validity for me to trust that this is a pretty bearish setup. And we got our first spill, and it looks like we're consolidating, and I think we could get another spill here to the downside, except we've now confirmed the lower low, lower high formation. So now we're going to get even more of a spill, because now the confirmation is, in fact, yes, we have now created lower high, lower lows on smaller time frames like the 60-minute, and this major level of resistance has now rejected, and we start to see the formation come in. So now we're probably either going to test this, maybe if not come lower in my personal view. I do think that we will test it. We have a mid-range zone at $13. So from $14 basically to $13 could be a first take profit, because we do see it's a key structural zone we can see with the reversal that we got right here with the 2 trend lines. So that's going to be the first zone that we're going to be looking at. And then the next zone we're going to be looking at is going to be those lows of around 12 or 1180, somewhere around there, to play it safe, with the candle bodies of the 1 hour somewhere around there. Maybe even $12, let's say. But I do think that we could get a spill, and we'll discuss that on the weekly even, on why this is such a strong level of resistance. So let's zoom out right here. All right, so let's get our snip and talk about the large time frame, the weekly. And we've already discussed the 1 hour, and we've seen how the price reacted to around the $14.50 or $15 zone, right? We've seen how well that held, and we got our first dump down, and then now we're consolidating, and we've seen the sellers come in and really show their strength, right? And the buyers just could not hold above that zone. So we see our first support zone, our first interaction, and then we see 1, 2. This is not perfect, and you see 3, 4, 5. So we connect those. Let's try to make it somewhat clean, kind of like that. Now it's a zone, right? But that, you see that horizontal zone, very, very well respected. I think I'm going to try to do it in one line to make it look a little bit cleaner. There we go. Pretty happy about that one. So that's going to be a very strong level of support, which is now going to act as a key level of resistance at around $14.50. The highs are $15, but let's say $14.20 to $14.80, let's say, to round it off. That's going to be a strong level of resistance. Now, what else do we see is we see a high right here, anchor point, and we see another high, and then we see another high, and another high, and another high, and we see we can draw a trend line connecting the lower highs, and we can even see it as a support right here, and it goes all the way back, and there was a resistance up higher there. So this is a key level of previous support. It broke, retested, and then it fell all the way down, retested once, twice, 3 times, 4 times, and now it's retesting yet again as a key level of resistance. So I would not be surprised if we got at least a rejection back down to around $12. That's why my bias is a little bit more bearish on silver. It could just be a tiny consolidation, and then we could just get a massive move to the upside because buyers want to look at precious metals. But in terms of the TA, it just looks like we could easily get another test of those lows here because it's such a strong level of confluence for the sellers. So in that said, we can see right there, right? Key level of resistance, key level of previous support, now acting as a level of resistance. Let's jump to the 4-hour time frames. We're now connecting the high, lower high, lower high, lower high. Didn't perfectly touch this zone. We could probably fudge it a little bit so it touches, but I'm probably not going to do that because I like the outline of the structure of the market to be shown, which is the 3 zones right here. 3 zones make it a potentially valid zone, and then the 4th will make it a valid zone. And then now we are consolidating, but now we're, like I said before, holding the previous market structure support as a resistance, which is pretty bearish. And we can see this red zone as the level of confluence. So that's why I'm not surprised, or I'm not looking to be surprised if it does make a move to the downside, and I'm actually somewhat expecting it, especially because we see gold moving to the downside as well, right? So that is now going to be a potential sympathy play for silver, because we already see one asset within the asset class go down in a relationship that is usually somewhat similar, that's dependable enough to actually use in an analysis. All right, so that is silver. Gold and silver ratio, not really going to talk about it. Look at yesterday's video if you want to know. Not really going to talk about the weekly chart because nothing has happened. U.S. oil tried to break out of the descending trend line here, but it still has not. We got a squeeze from the middle of March right there, and then it dumped all the way back down, tested the descending zone yet again, and then is still not able to hold that zone. It's just a matter of if we're going to form another lower low. That would be another just tumble down probably to the 1750s, or we're going to hold this high and get another squeeze, and then it's just a matter of if we're going to break or tumble back down. But yeah, nothing really more to talk about on U.S. oil. On the weekly chart, we have broken officially below that zone, so I wouldn't be surprised if we get a retest back up to the $24 range, 23, let's say 50, as the candle closures, maybe with the candle being at 25, but that's a potential because we see on the weekly this is a strong level of support that just broke, so I wouldn't be surprised if we get some level of a pullback, but we've seen continuous red weeks since February here, just down every single week. So it is getting absolutely demolished. So having some pullback would not be too surprising. But my focus is not really on trading U.S. crude oil right now. All right. So that is the commodities. I think silver is looking like the best opportunity, in my opinion, at this very moment for a possible trade. Going to get a little bit of a drink of water. Coffee, not water. I'm not drinking a whole lot of water right now. And then we'll go on to the indexes that we're going to be looking at. All right, so we got SPY, or the SPX. I'm not really going to be talking about the larger term time frame because we talked about that yesterday. But just an update from what we've seen so far. We see some level of a support hold here. We see a low, but we do see a lower low forming right now. Not too worried because we see that zone. So let's actually draw 2 zones and then copy this zone. Oops, that's not what I wanted to do. Copy this zone, put the anchor point right at the top of that high, and then now we see this second tier of an ascending zone. Maybe if we can make it a little bit more red for viewers to see, like so. You can see initially we got our first zone that we squeezed out of. That's where my initial entry came from. Just went pulled back, retested this zone, and broke out of this market structure right here and squeezed out of that zone. I was like, okay, that's a pretty good entry in my opinion, and that's what we took. And yeah, we formed a lower low from that low there, but this descending trend line, I'm very all right with holding for a little while. We might even spill and come into this zone right here, 24.46s or whatever. But I did put a stop loss below that zone for a reason, and I wouldn't be surprised if we do get a little bit of a spill and then we get a strong push up, breaking this little market structure resistance at 26.45. And then if we break that, shorts are again going to be out of the market, squeezed out, because from this point onwards there are, I'm sure, some short sellers coming into the market. That was a pretty big rejection right there, and then it rallied back up to the highs, and then we've rejected off the highs. So people might think that we're going to come back down. It's some level of a support and resistance. So yeah, I do think that it could still come and hold this descending trend line, and then we also have a confluence zone with this ascending level of support. Let's get our arrow. So it could come all the way and spill all the way down here. Not a problem. I'm not going to move my stop loss up until we start to see a break of the zone. I want to give the price to freely move all around this triangle here. I do think I gave that price enough room because my stop loss is below the previous low, major low right there. If it goes below that, I'm going to say I'm wrong, and I'm very happy with taking a loss and moving on to the next opportunity. So yeah, that's going to be my trade. I'm going to keep it on until really something happens. In these volatile times, obviously, keep it low risk, lower your position size significantly. But at the end of the day, there are some opportunities that you can really profit off of. So that's going to be the trade I'm currently in. And then discussing more of a larger time frame move that we're going to be looking at. The TVIX trade. TVIX is now coming back down. We're obviously not looking to enter or anything just yet, but we are looking at seeing if it's able to break the support at 300, and then if it's able to break sub 300, it's probably going to go down and tumble to 200. I would not be too surprised. And then that would be a decent place to start looking to average in, considering SPX. We always are, for trading TVIX, I'm mainly going off of the SPX because it measures the volatility of the market, right? So then I'm looking to see if volatility is coming into the market. So I'm looking for a nice correction and exhaustion phase, and I'm looking to enter at the completion of the exhaustion. So right now, I'm, in my opinion, a counter trend trading contrarian trader that is trading opposing the larger trend of the bearish move that we're seeing in the US stock market. And that's totally fine, right? Low risk. It's still a trade that I think could push us up. There's stimulus, $2 trillion worth coming into the market. People are a little bit more optimistic. It's only the first pullback. You see people like Jim Cramer say, it is betting against science, shorting or betting against the stock market. Well, no, it's not. It's overinflated. It's overvalued. Obviously, there's cycles in a market, and people talking about that. You just look on social media, and I know that's not the best place to look, but I do think that you get somewhat of an understanding of where a lot of people's minds are at, and you see a lot of people saying, buy the dip, once COVID's done, we're going to bounce back, this is the worst of it, this is the bottom. I've made so much on airlines since I bought them, since I bought them at $10 and they're up at $30, oh my god. But I personally think that there will be another more significant drop. There'll be another drop, and it'll be more significant than the one that we just had. And that sounds terrible, but I'm a technical analyst, and my job is to analyze financial markets, and it's not to tell people lies and say everything's all right and pat them on the back. My job is to digest what is currently happening in the global macro space and cryptocurrencies and present them in an unbiased way. And I'm trying to do that. And obviously, every single human being will have a bias of the financial markets. But at the end of the day, I'm trying to present information that I think is valuable, that would benefit you in some way, shape, or form, in a way that you're able to digest it and create your own way of approaching the problem, situation, the markets, whatever you're thinking, whatever I'm talking about. I don't want you to take my view. I want you to think about it. Very big difference, right? I'm not telling you it's going to go to 28.50 and it's going to reverse. I'm saying, I think there is some level of a probability that because of the stimulus, because of the bounce, because of the aggression of the move, and it's only the first pullback. Look at 2008. We saw a big move down, and, right after Christmas, we got a massive rally. Look at 2019. It was great, and, people are reminiscing about 2019. Holy shit, look at that bounce. It's just a bounce 2.0, right? So this and these drops back in January, back in 2018, and it's the balance of the start of 2019. I think presented the idea of big volatility down instantly equals a fire sale, and valuations at plus 24 2400 is perfectly normal, and it's a great place to buy and dollar cost average for the next 10-year bull run that we're going to be seeing. But in my personal view, I don't. It's the longest bull run in history. Just, I don't know. I feel like I'm a broken record, but I've been talking about this for a while. But anyways, that's my view on the SPX. Hopefully, you were able to get some level of knowledge on it or something. And then TVIX is going to be the play that we're going to have for a possible opportunity. Like I said, looking at the risk reward parameters, if you're averaging in, let's say, from 200 to 100, when the SPX is slowly inching, climbing up towards our main level of resistance, maybe at 2800, 2850, around the 50% retracement, or we could get the 618 all the way almost at the 2900, 2950, and that would be a pretty key zone. We can see, obviously it's a zone, but we can see this structural level right around here. Oops. Let's get that zone right here. It was previously a, let's get our arrow, previously a, let's get that, resistance, 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 broke through, held, support, massive wick to the downside, commence our huge bullish push, right? So key level between the 0.5 and 0.618 retracement levels, and then that's going to be a potential level we're going to bounce, see a lot of sellers come in, and then hopefully it's going to inch up. It's not going to be a massive volatile move up. Hopefully it's going to be a little bit of a slower climb. So then TVIX, there's less volatility in the stock market, so then TVIX goes down because it is going to measure volatility. It is the VIX index basically, and that's what we're looking for. And then we're hopefully going to see those the number from 300 go down to sub 200s, sub 150s, sub 100s, and then looking at the risk reward parameters. Let's say even if it goes down to $40, $50, let's say the potential risk is 70% of your money gone in this trade. The potential reward is 4, 5, 600%. So looking at the risk reward, obviously it's skewed. It's an asymmetric risk reward trade, in my view. So yeah, take it as you will. I'm not saying it's a good opportunity personally. I'm looking at it, but do your own due diligence. Why are you doing what you're doing in the markets? Don't listen to me. I'm just a random person on the internet. Do your own research. Know what type of trader and investor you are. If you're Warren Buffett, you is sure as hell not going to do anything like this. Yeah, so like know who you are, know what your values are, and don't do stuff that go against what you truly want and what your financial goals are. So that is basically the video. Not really talking about the dollar cost or the US dollar index. Basically, looking at the large time frame here, we see a nice ascending channel or wedge somewhat. Massive rejection at 103. This is basically going to be the power or the strength of the US dollar, and this is, I believe, okay, when you're measuring something, like you're measuring the strength of a US dollar or something, you have to compare it to something, right? For stocks, you're comparing it to dollars, gold dollars, crypto dollars, oil dollars, everything's in dollars. But when you're comparing dollars to something, you have to compare it to something. So what is the US dollar currency index comparing it to? It's 60% euro, 15% yen, and then the rest is going to be other emerging market currencies. So give you a good understanding of how this is comprised. And we see it got a huge spike up and a huge spike down, tons of volatility, and not much more to say. We're now within this range, and we're not really trading it. We're just looking at the large-term macro view of the dollar index. So that's going to be the video for today. I really hope you enjoyed it. I thought the news story was pretty interesting, as well as some trading opportunities here. Silver looking pretty optimal. Gold still coming to the downside. So yeah, I will let the Performante premium numbers know, of any moves, obviously. But at the end of the day, you got to trust yourself. You can't trust. You can't be a sheep, basically. But that will be the completion of the global macro update. Thank you everyone for watching. We really appreciate it. Decent turnout for our YouTube and TikTok for today. I will close the recording that I have and I will put this on YouTube, but now I will go into the questions that we have that we go over every single weekday when we have our crypto market update and global macro update. So we do this every weekday. If you're tuning into a recording that you're watching on YouTube now, tune in live, and then if you have any questions about stuff we're talking about, I will go over them every single day on TikTok as well as YouTube. So thank you very much for watching. If you thought this was useful, if you thought that this was entertaining, or you got some level of value, we would really greatly appreciate if you subscribed to our channel, and it would help us out a lot. Thank you very much for watching, and until next time, happy trading.